moving into today's trading idea, we have three. Let's start with the first one would be Inari. Inari has been highlighted in Trader's Almanac before on the 7th February. The stock, however, facing some sort of the setback, despite gaining ground for the past for the next 2 weeks. So what happened is the downside was kept right within at 3 ringgit, which is our stop loss, I think, at 2 ringgit and 96 cent, which means the downside was kept way above our initial stop loss level. So that means the constellation that come through did not break the immediate key support level. So despite testing those level twice, the stock continued to hold ground before eventually, break out above this triangle pattern on 24 May. So the stock is actually peaked at 3.5854, gaining about 11.37%, closing above our first initial resistance at 3.46. Now, for the past few weeks, we've seen a new higher structure was formed, a solid rebound above the 13-day moving average, give you indication that this breakout was followed by a return move, and we are seeing a new gain as per yesterday, which increased the odd of the 1, 2, 3 pattern breakout. So the gain was backed by fresh uptick in RSI, higher trading volume, D trend also back into positive territory. So we're expecting the ongoing uptrend to continue further. So if you cross check on the weekly chart, it does look quite interesting as well. Now, we reiterate our technical buy with a new and higher target at 3 ringgit and 69 cent and 3 ringgit and 99 cent, with the cut loss has been revised higher from 2 ringgit 96 cent to 3 ringgit 15 cent. Risk to ratio remain attractive with 7.6% downside risk against 17% upside potential. Cross-check with our quant database. We are using quant style of quality with the scoring high at 7.05. All right, moving into second trading idea will be red tone digital. So red tone digital constellation with the triangle pattern is about to end following yesterday gap up move on the back of higher trading volume. At the stock also bouncing off this 13-day moving average, while momentum generally has improved. If you look the reading on RSI, the trend of RSI previously was a little bit on the weaker side, but eventually when the stock start to shift upward, I think on the 9 May, the trend for momentum also has start to improve. So a change in the momentum trend was backed by equally, change in the price trend. So we expecting the ongoing uptrend to continue. So we put our resistance target at 1 ringgit 15 cent and 1 ringgit 31 cent with the cut loss below 95 cent. Risk to reward ratio is attractive with 9.5% downside risk and against 24% upside potential. There's no scoring, there's no scoring for the stock. All right, last but not least, we have Sunview. All right, for Sunview, one of the reasons why we highlight because the stock, if you look on the long term, is actually looking quite I would say on the downtrend, but there are significant change in terms of their trend, particularly over the past few weeks. So we've seen a solid breakout move, a gap up move on 30 April, while it still stuck within the cost leading range, is actually break above the long-term downtrend line. So the subsequent gain saw the stock building another baseline within this 88-day moving average, while yesterday gain is actually pretty much validating that the overall trend has started to shift upward. Another notable change is actually how you see in terms of the momentum trend here as well. If you look on the top panel over here, the RSI trend has started to change the moment the stock close above their long-term downtrend line. So because of this, because of the change of the momentum trend, we think there's decent chance for the ongoing stock to continue to trade higher, keep starting a new upcycle backed by higher trading volume and equally positive reading in the trend. So we put our technical resistance at 76 cent, with next resistance at 85 cent, cut loss below 62.5 cent. Risk to reward ratio to 9.4% downside risk against 23% upside potential.